Hello traders community. Today we are going to discuss about change of character. The change of character refers to a change of market structure. It occurs when price takes out a high or low, then proceeds to take out the opposite high and low. Understanding this concept can help futures traders identify potential shifts in market trends, allowing them to make more informed trading decisions. By watching for these changes in market behavior and reacting accordingly, traders can potentially improve their chances of making successful trades in the futures market. So let's start with the bearish change of character. When in an uptrend, price is creating higher highs and higher lows. The price reversal point from an uptrend to a downtrend is what we call bearish change of character. When the last swing low has been violated, we expect a reversal of market structure. The last swing high that made the first bearish break of structure is our point of interest. It will be usually an order block with the fair value gap. We wait price to return back testing the bearish order block and filling the fair value gap before taking our short position. Note that the last swing high is protected by market makers. We don't expect price to break this high. So let's see a figure of a bearish change of character. Just after the last bullish break of structure, price showed the bearish momentum with the first bearish break of structure. Once the price reached back the bearish order block and filled the fair value gap, we can take a short position and target each time previous swing lows. So let's move on to the chart to see an example of a bearish change of character. Now we are using 30-minute Nasdaq chart. The market was in a bullish trend. Price was creating higher highs and higher lows until reaching the last swing high. We can notice that after this level, price began to drop down, making each time lower lows. Once we had the clear first bearish break of structure with momentum, we can confirm the change of character. We are expecting price to retrace back to our point of interest, order block in this case, before taking a short position. Every time that a bearish change of character happened, we know that price is targeting swing lows and that lower highs are being protected. Same thing for the bearish change of character, but in an opposite direction. It is the point of reversal after a bearish trend. After reaching the last swing low in a downtrend, price shows bullish momentum and break the previous swing high. We expect that price will retrace back to the bullish order block that made the first bullish break of structure before continuing higher. Liquidity is a magnet for price, right? This time and after turning bullish, price will target liquidity resting above previous swing highs or any form of liquidity left, hidden and visible one. Note that the last swing low is protected by market makers. We don't expect price to break this low. So let's see a figure of a bullish change of character. Just after the last bearish break of structure, price showed the bullish momentum with the first bullish break of structure. Once price reached back the bullish order block and filled the fair value gaps, we can take a long position and target each time previous swing highs. Let's move on now to the chart to clear things for you. In this second example, we are using US 500 15-minute chart. Price was bearish, creating lower lows until reaching this last swing low. We have a bearish break of structure first, followed by a bullish break of structure as well. So obviously we have a bullish change of character. We are now interested in long entries after this last break of structure. We wait for the retracement to happen before taking our entry. The target should be now the liquidity resting above the previous swing highs. Change of character and time refinement. When using high time frame for hour or 1 hour for example, and we notice that price reached a point of interest, either bullish or bearish, we wait for confirmation of change of character or lower time frames, 5 minutes and 1 minute. This refinement is a must to reduce risk and increase accuracy as well. Let's move on now to the chart to see some examples and so that you can understand better this concept. We are using Nasdaq for our chart. We can observe this change of character from bearish to bullish. When price reached this last swing low, it made the bullish break of structure, returned back to the order block, and continued higher. After getting back to the order block, we can switch the time frame into 15 minutes to optimize our risk-reward ratio and increase accuracy. Now we switch the time frame to 15 minutes. We have a bullish change of character when price retested back the 4-hour bullish order block. We can take a long entry once price reaches the 15-minute order block with a risk-reward ratio of 1.7.